Всім привіт, всім привіт. Багато людей. Всі зробили сьогодні правильний вибір. Не сидіти в офісі або вдома, а прийти на хорошу конференцію. All right, Semyon. We have today a special guest from US, from Boston, Semyon Dukach, founding partner of One Way Ventures, a VC firm. So let's make a warm welcome to Semyon.
Дякую.
Yes, man. How does it feel to be in Kyiv?
It's awesome. Best place in the world.
After such long trip? Yeah. So, Semyon, you have a very interesting biography. Semyon is son of immigrants. He studied computer science in Columbia University, in MIT. He co-founded a few startups. He was a managing director of Techstars, one of the leading accelerators. And now he is founding partner of a great VC firm. But all that is, let's say, not unusual to see in a VC's bio. But there is one interesting experience that is pretty unusual to see. So you have been a very successful professional blackjack player, right?
That's true.
Yeah, and there is even a book about how the MIT team beat the casinos, and even a Hollywood movie about that. So I guess you made a lot of money, or a good amount of money then.
I wouldn't say it was that much money, no, a little bit of money. But, you know, it was a good challenge.
Yeah, and the question is, how did that help you to master your entrepreneurial and investor mindset?
Master is a strong word. It's a work in progress. But, you know, the blackjack team, it was my first startup. And I guess in a sense, it was my first investment fund as well, in that, you know, it was a legitimate organization. We paid taxes, we had investors, and we played, and we had an advantage. Yeah, I mean, lots of that was relevant to what I do now. In particular, just quantitative thinking, understanding probabilities, expectations, you know, variance and such, risk, knowing that there's usually, even if you don't have all the information, that there exists like a precise mathematical answer for almost any investment question. A lot of other things too, but I'd say it wasn't, you know, very satisfying in that we didn't create value for anyone. The casinos didn't thank us for winning money from them, generally. So, you know, glad I did it, but probably shouldn't have spent quite as much time doing that.
Yeah, so it helped you to make calculated risks, right?
Yeah, calculated risks, for sure.
And that's a good point that you mentioned about creating or not creating value, obviously. As a founder, or even more so as an investor, you help to create value. And your VC firm has a very interesting thesis. Yeah, it's investing in immigrants, in people who left everything and relocated to US or to Canada. Why so thesis? Why do you think it's a good idea to invest in immigrants?
I mean, we are immigrants. We understand immigrants. And it so happens that immigrants have created the bulk of the value in general, right? Like the significant majority of all the unicorns, all the tech startups that are worth over $1 billion now have been started by immigrants. And so we decided to focus in on them. And we're generalists in terms of verticals, but we only back founders who themselves have made that journey, right? Went into the unknown, so to speak, bought a one-way ticket, where they didn't necessarily understand the rules of the game, even didn't speak the language, but made it, right? And so this is predictive of what they can do with a startup in terms of, you know, challenging, disrupting established competitors.
So, what other signals you see as good predictors of success? As I understand, you don't like to look at these numbers like markets, trends, so it's more on the personal side. So what do you look for in the personality of the founder?
Well, it has to be someone who has a very strong, well-defined vision of the future, right? They believe that the world is going to work a certain way. They believe in their own success, and they will listen and be curious about anything you might throw at them, but they're not going to necessarily take advice very often, right? They'll understand their market certainly better than we do, and they should be, I mean, of course they need something that's potentially defensible, some kind of potential moat that they can build, some unique technology probably, or at least a unique understanding of how to apply the technology to a particular market, right? Like some founder market fit, some relevance to the customer that they're addressing, and an ability to communicate, and I would say an ability to inspire others to join them is really important. Some of those things, and it has to be a large market potentially. It has to be something that's venture scale, of course.
And what are some of the most common red flags that you see in founders and decide to not proceed? I can share the most recent one when I was talking to a startup which was very fast growing. Their revenue grew very fast, but when we checked with one of the companies that was mentioned on their landing logos, they said, we've never had a chance to test it, actually. They offered it, but we haven't tested, so we thought, wow, if this guy oversells it so much, we won't proceed with them. So what are your red flags?
Red flags. I mean, look, you don't really need a reason not to invest, right? I mean, as you get stronger as a venture brand, you basically have to turn down, stronger and stronger teams because it doesn't fit what you're looking for at the moment. And we have our own portfolio construction, check size, ownership targets, all kinds of stuff, right? But yeah, I mean, when someone is, there's a fine line, right, between being able to be very convincing and sort of creating your own reality, being a little bit ahead of the facts, and just lying outright. Yeah, it's a little bit of an art more than a science, I'd say. And the AI, of course, will disrupt us as well. But I think it'll take a little longer because the training data set, it takes a while to know if you're right or wrong, right? It takes at least a decade, maybe 15 years often, to really know if someone was in fact the kind of person who can build a huge company. So experience, I suppose.
Do you agree that great founders can distort reality in a good way?
They have to. We have to. Yeah, absolutely. We have to. Belief can influence reality. Right?
Not in a bad way. So, have you invested in Ukrainian founders, Ukrainian-born founders?
Of course. And before I started One Way, like for many years, I was an angel and I made direct investments. It was like one of the first checks into companies like Preply and BetCube and what else in Ukraine? AirSlate, I was almost a co-founder. SMT.com was a company, here. So yeah, but now in One Way we have several Ukrainian-born founders. We have a company called ClassTag. We have InStock, Igor and Shishkin. I think a few others, yeah.
Influ2?
Oh yeah, Influ2, absolutely, that's right. Yeah, I can't forget about that one.
Do they do well in your portfolio compared to others?
Yeah, Influ2 is very solid, yeah. It's you get some founders who exaggerate and bullshit quite a bit, and some that are just executing and quietly growing, and Influ2 has been, quietly growing very consistently for years now.
And speaking of your connection to Ukraine, as I understand, it's not only investing in Ukrainian founders, right? You have some other projects connected to Ukraine. Maybe you can tell us a bit about it?
Мої бабусі, дідусі з України, з Житомирської області, і моя дружина з України. Ми познайомились на поїзді Одеса-Київ 15 років тому, також в неї є щось.
Wow. And you also have this project, Cash for Refugees. Tell us a few words about it. It's a great project.
The Blagodiny Fund, yeah. It's something my wife started. Well, I guess we started it together on like the second or third day of the big war. Just flew down to the border and figured out that we can just give cash to like women with little babies and old folks who were walking across. It was a mess, right? This was near Chernovtsi in the Romanian border, and then ultimately ended up going back and raising like millions of dollars and sending people here, like hundreds of volunteers, and ultimately like met with 35,000 people face to face, internally displaced refugees, and set up money transfers to their like private cards. So my wife like dropped everything in her life, and she's still running that. It's evolved. It's now called Sea Forward Ukraine. And yeah, for the first like couple of years, it was just like cash support. But now there's a program that she runs every summer in August, like in Zakarpattia and Uzhgorod, for young women leaders, and she like brings down incredible people to inspire them in person for a couple of weeks every August. So yeah, that's a nonprofit. It's very cool. But I'm honestly like not as involved anymore running the venture fund.
But in first years, you just gave away a few millions of dollars, right?
Yeah, millions of dollars, like not our, like I mean, in the very first trip it was our own money, but then we raised money. We registered the nonprofit in the U.S. and here as well. It's much harder to register here, believe me. Yeah.
Oh, not many people who manage money are so so altruistic to organize such initiatives. So let's make a quick round of applause for Semyon for this.
It wasn't me.
Yeah. Let's talk about what's happening on the market right now. It's weird. It's a tale of two cities, AI and everything else. Investors love these huge technological waves like cloud, mobile. Everyone wants to be an early investor in the next Snowflake or Uber. And now, obviously, everyone has a great fear of missing out, the next big thing. Do you have an AI FOMO?
FOMO? No, I mean...
Fear of missing out.
I think at least like 2/3 of all the investments we made in the last 8 years at one way had significant like AI component. Definitely over half. I mean, today investing in AI is like saying you're gonna focus on, I don't know, software or the internet. Like everything is AI, right? Even like the hardware companies I back, like we do deep tech, I do some stuff in space. A lot of even those have AI components, and certainly any kind of like vertical SaaS or marketplace, AI is everything. But generally, we don't chase trends now. If anything, we try to be contrarian. And yeah, I mean, some of the early investments we made, we're exiting in secondaries because the valuation's just out of control here and there. But I don't know. AI is definitely, as big a technological shift, as maybe the internet was when it first came out. Like it's a big thing, and some of these high valuations are probably justified, but not all of them.
So, looking at this market, how do you cut through the noise? How do you see where the real value is being created with some defensible mode?
That's what I ask the founders when we talk to them about an investment, right? It's up to them to figure out a way. It's hard, right? Like it's hard to tell today with AI companies that are growing very fast, especially what's going to be defensible, where the moat will remain, and what's going to actually be done just as well by OpenAI, some of the fundamental core models. But you need a strategy, and you're evaluating a person at the seed stage. You're evaluating how they think. Like you might ask them, you might challenge them and say, well, what if this doesn't work? And that happens. And you don't want the person who just says, oh, I'm sure that won't happen. You want them to say, well, okay, if that happens, I don't think that'll happen, but if that happens, I don't know, maybe we'll try this, or we'll do that, or we'll find some other way. But what I know for sure is that eventually, like our tech, like we will build for this market the product that they really need because we understand the customer, and we know we can do it. Like you want that fire in their belly, you want that energy. And then you just make a choice, you make a decision, and you place your bets and wait a long time. And most of the work isn't like picking the companies. Like most of the work is actually helping the founders build the companies. That's where most of my time goes.
And how do you see, speaking of defensibility, what types of startups will be killed by OpenAI, Anthropic, Google in the coming years?
And I don't know for sure, right? But I like to see like APIs where like other companies will have to plug into your ecosystem where you become like the system of record, or like certainly if you have unique data, unique training data that as you grow, stays unique to you. As you sell, you generate more of it, and your system gets stronger in some way that doesn't
data
just make it.
Flywheel, it's data flywheel. It's
yeah. But again, I leave it up to the entrepreneur to think through that. I expect them to think about that better than we can.
Speaking of startups with unique data, I've seen in your portfolio a few vertical AI companies. So it's AI for some specialized industry, like AI for manufacturing or for real estate. How do you see this particular segment of the market? Do you think it's more attractive for investors than horizontal?
It just depends on the founders, right? Like, again, we invest at the seed stage. We usually invest before a product is shipped or when there's just like MVPs. We never invest without customers, of course. Like, they need to know who their customers are. They have to be building for somebody. It's, yeah. Sure, like vertical, it sounds better, right? Like focused in general is better than unfocused. Grandiose is not so good, right? Why is your software over time going to maintain high margins in your vertical? Like, do you have unique distribution on the sales side, or is it a question of user interface that like no one else can build it, and will the value be captured there? And usually, if it can get to something like a system of record, right, that others will build on top of as you scale, that's pretty defensible usually. Or if you have maybe a vertical SaaS with a marketplace component where there's a first mover advantage, you get liquidity on both sides of the marketplace. Sometimes you can maintain that longer term.
Interesting. With this new wave of generative AI, we've seen some of the most fast-growing companies in the history of software, like this Cursor AI and others, which grew to, what, 2 millions of revenue in just, what, in 1 year or 2 years. So that actually excites investors, but also we see this notion of so-called vibe revenues, because there is so much interest on the market. I mean, on demand side, like every company wants to try AI. Every company has AI FOMO, and AI budgets increase. So companies spend more on AI software, and that creates this huge demand, and that helps these companies to grow fast. But how sustainable the growth is the question. How do you see this trend of so-called vibe revenues, like very fast-growing startups, very fast-growing revenues, but without visible sustainability?
Yeah, I mean, when you look at B2B sales, we might talk to some customers, and we might ask them whether they evaluated the competitors, right, or not. That tells you a lot. You might ask them how big you think it can get, like how important the solution is to their business. And when it's like more small business or B2B2C or just consumer, you look at retention a lot more than growth generally. Like, yeah, we have companies like 10x revenues, every month for like 6 months, and it seems like incredibly steep, but that doesn't mean necessarily that it's going to go anywhere, especially when it's a front end to like generative LLMs. But sometimes, the smarter founders will think about who their long-term customer is and what the moat is, and they are focused on retention of the right people, the ones that they really want to build a business for. Sometimes they need a bunch of other people to be on it in order to get the data to build a part of it. Like we have a company called NIM, one of our more recent investments, NIM, that the AI, I guess it's NIM that video. You guys can check it out, it's pretty cool. And you can pick your LLM and it's just like generative video, it's incredible, it's like a studio for video, but the thesis is that there's a middle layer, like the co-pilot layer. There's like the UI front end, and then there's the LLM, and then there's the middle layer is what sort of what helps you build an actual movie that people really want to watch. And so they are concerned about getting the right kind of people on their system today to train this layer, because they believe that that's going to be the part that's defensible to them. And you know, they're in the process of trying to raise a large round on that thesis. But like they have the hyper growth, but you know that the smart investors know that they're not going to invest in like trend following hyper growth alone.
Interesting. And do you see this new wave of AI companies being smaller, leaner, having less people in their teams?
Well, yeah, in general, of course, yeah. Fewer people can build a lot more today, because you could also use the AI to write most of your software, right? So.
Right, and as well, AI salaries has gotten out of control. So due to these trends, there is a trend of solo founders building. One of my friend, he's a founder, he sits in San Francisco, he says, I come to the co-working and everyone is a founder, solo founder, like just one guy building a company. Do you believe in such type of founder, solo founders?
Well, it's kind of cool, right? I mean, it's cool that a person can just start something and actually, you know, generate revenues, make money. I'm all for entrepreneurial activity, but that's a different. Solo founders is a different question. No, I mean, I don't love solo founders, right? It's just too damn hard. It's hard to like raise enough money to pay people to do all the work. You need multiple people to be in it, you know, to have skin in the game and really risk. Yeah, sole founders are tricky. Sometimes when someone is like strong enough, you know, and can't really work with others, like it happens, but it's not ideal.
Do you have solo founders in your portfolio?
Yeah, we have a few. Yeah. I don't love it though. I prefer at least like the 2-3 person team from the very beginning, or even 4 or 5 sometimes.
Speaking of 3-person teams, NFX fund, you made some joint investments with them. They have this idea of 3-person unicorn. So based on this idea that AI supercharges, superpowers every person on the team, like, why should we hire any more people than 3 founders? So their bold thesis is that very soon we'll see the first 3-person unicorn. Do you believe in that?
I think a better question is when you'll see a 0-person unicorn, like when all the people are actually AI agents, and you know, they're out there. There's like now transactions between like independently acting AI agents, you know, moving crypto back and forth. I think they usually buy, you know, server access, like right, like training time, and they buy and sell it to each other. Like this is actually occurring. So yeah, it's interesting. Like our very last investment out of our new, you know, 3rd fund is a company that does like accounting and tax prep, but it's like fully headless agentic AI, where there's no website or app. It's like an email or SMS, like WhatsApp interface, and it just looks like a forwardable intro or whatever. Like you make, I get an email saying, hey Semyon, like you mentioned that you know you have trouble like with your tax preparation. Like here's, I use this firm, you know, I think they use AI, whatever. It's like just talk to Bob, and Bob is like, oh, thanks John for recommending us. Very kind of you. I'll move you to BCC. Semyon, like good to meet you. How can we help? Like you know what? And then it integrates right into your inbox and like finds all the tax forms, and behind it there's like several other agents. So it works like a small accounting firm. Right, and then there's also humans in the loop because it's taxes and like, you know, you don't want to hallucinate and mistake there. That's their approach. They haven't built it yet, but like that is the approach they're taking. So, yeah.
The future without without people in the workflow looks very, very interesting. And actually many analysts expect this year, 2025, to be the year of AI agents. We hear about AI agents everywhere. So how do you think, who is better positioned to build this critical AI agent? Incumbents like Microsoft, Salesforce, because they have all the distribution, they have all the data, they have access to customers already, or there is still place for disruptors, for startups, for 1 or 3 person teams to build successful AI agents?
Well, generally speaking, incumbents can rarely move fast enough to actually rapidly exploit like a real paradigm shift. It usually ends up being startups, that can really focus on one thing and try changing the direction quickly in a way that a large organization just can't do. But some of the stronger incumbents find a way to acquire those companies early enough and develop some things internally. So it's a balance. There's also antitrust, right? Like some of the players have just gotten so large that at the policy level, there's a lot of pressure for them not to swallow everything.
By the way, speaking of exits, did you have problems with exit environment recently? Were there good acquisitions or secondaries recently for your fund?
I don't have a problem with exits, but I would say some of our LPs would like to see a little bit more exits for sure. In general, right, there hasn't been a lot of big IPOs for a while or big acquisitions.
What should change for the exit environment to improve?
I don't know. It comes and goes, right? There's always, public markets are going to exist, and we're looking at a pretty long time frame. Like venture capital, it's the seed stage. It's definitely over a decade, and the folks who want quick returns aren't the ones who do really well, right? So I don't worry about it too much, and we'll have, sometimes there's secondaries. We do get out in secondaries when the valuations just can't be justified, when we lose trust in a founder or whatever. But for the most part, we just try to help them generate value, plug in our network. We have like 300 investors who sometimes help the companies. We got this group called the Pathfinders, who are actually like unicorn founders who've built large companies. We have 25 of those people, who spend a little bit of time helping our portfolio, and it just solve the crisis of the day, and not generally worry too much about exiting. Like if you do well, opportunities will come, and the times you exit early is when you lose confidence, when you realize that there's not going to be a defensible moat. Then you might take an acquisition offer.
I ask him because just recently there was an event that helped me to realize that these exits, liquidity, matters not only for investors, not only for founders, but for employees as well, because many employees have options, have stocks. Recently we had one of the largest, if not the largest, exits in the history of local tech industry, Uklon, ride-hailing company. Kyivstar bought them, 155 million, and 12 or 16%, something like that, was allocated to management stock option plans. So it turns into what? Into a few dozen millions of liquidity for not just for founders, but also for employees, for key people, and hopefully these people will start another business, and maybe we'll see so-called founder factory, or mafia of Uklon. So exit environment has a bit of improvement in Ukraine, at least. By the way, speaking of Ukraine, obviously globally, as I see it, there are two very hot topics: AI, Gen AI, and defense. So obviously, being in Ukraine, I feel like we are lagging in AI for obvious reasons, but we are ahead of everyone in defense. But looking at it from investors' perspective, this market looks very complicated. very complicated. The government is the main buyer, the exits are very limited, but the products are crazy good. What's your view on the opportunity for investors in this defense tech space?
I think it's a fantastic opportunity. I think I believe that Ukraine after victory will in fact be not just the center of Europe, but like a global center in the new generation of aerospace and defense giants. And I think a long-term investor would place their bets now. I mean, there are some funds focused on defense here, and I think they'll do really well. I wish we were large enough to invest. We only back immigrants in the U.S. We can't. I actually looked for ways, but we don't have a way to invest here. It's just too far because at the seed stage, we lead rounds. We don't follow other people, and we need to spend time with the founders. And the trip's kind of long. But the folks who are here, like yourself, I mean, if I was here, I'd be leaning really heavily into some of those investments, because I think just everything about the culture here allows for rapid iteration, and the industry, like in the U.S., it's very stale. It's one of the more actually corrupt and slow-moving, inefficient parts. Except for new companies like Anduril, I suppose. But here, it's very dynamic. And I mean, I can just see it here at this conference. I walk through the area. There's a lot of energy. There's a lot of smart people, and there's some folks who are technical, who are not investors or whatnot, who come here because that's where the knowledge and the talent is, especially in drones and autonomous systems and things like that. So yeah, I'd place your bets if I were you.
Do you have any defense tech companies in your portfolio?
We do. It's not a particular focus, but space was a focus, and as a result, one of the aerospace companies that we backed kind of pivoted and actually has generated very significant revenues, selling drones that are used by Ukraine actively now. Yeah.
It is used in Ukraine.
Yeah. And this is it's a company called Destinus, and they are in Europe, so not really a fit for us anymore, so we're actually in the process of selling our position, which is a nice profit. But they've grown really fast, and they're in 6 different locations in Western Europe, but they also manufacture here, and the customer is here. Absolutely. I mean, I don't know who pays. Maybe it's a U.S. payer, but the product is used to hit Russia.
How do you think a successful exit may look like for a defense tech company?
Well, I think if you're investing in the right time, the successful exit is going to be a large IPO, and then and not like an IPO where you then sell to the prime contractors, right? But one where your company is going to be doing the buying, and I mean, I think there is really, especially as Western Europe is tripling its defense budgets, it's been made pretty clear that the U.S. isn't going to keep paying for European defense, and also I think the last few years in Ukraine made it very obvious how critical defense is to Western Europe, right? And so you can see just a political change. Even people like Macron, sounded very different 3 years ago than they sound today, right? And Germany is investing, and Britain. So I just think just take a longer-term view and expect large public companies to emerge from some of the startups that you're seeing here today.
Yeah, and Western companies, they very often try to open their R&D here to use this very valuable data for training the algorithms. So the task is to be the first who develops these great products and not to lose this competitive advantage.
Right. And I think the funds there are probably going to be scared of investing here for obvious reasons. So I would say if you're an investor here, I'm trying to convince you of something, right? I mean, you're with one of the larger private equity shops in the country, right? You guys should really make the capital investments to help some of these founders, not just give their data to Lockheed Martin, Raytheon, or whatever, right? But to actually build large, scalable companies in Europe, in the heart of Europe, which is right here in Kyiv.
Yeah, unfortunately, we can't do that because of our strict limitations from LPs. We have institutional LPs, but I've heard about rounds as large as 20 million for producer of reconnaissance drones, a few rounds of 7, 8 million. So, and more growth rounds will come this year, I believe. So, the industry is growing despite all the challenges. Okay, Semyon, let's try to think about the future. Not so distant, but let's say 3 years. Looking at what's happening in the market, looking at the trends that you see, what is your one or a few bold predictions for how this AI market will develop?
I don't know. I mean, nobody knows what the hell the future holds, right? That's what makes it interesting. But I can safely predict that the pace of change will continue accelerating, right? Like there'll be ups and downs and crises, and they will be larger, but they'll come quicker and they'll end quicker. And you know, bet on things that are dynamic, bet on people that are dynamic, bet on education, but maybe not on any particular curriculum, because who knows what the hell we have to teach our kids, right? But teach them how to be stronger, better people, teach them values, I don't know, teach them psychology, teach them teamwork, teach them perseverance, teach them confidence, teach them optimism. Yeah, that's what I would bet on.
Your answer made me even more nervous because you say that the acceleration will speed up. How much can it speed up? I can't bear it already, honestly. My brain was made for what? Eating berries in a cave, and now we have these crazy supercomputers in our pockets. Please stop accelerating this revolution. I can't even do that anymore.
It's not gonna stop. Just, you know, brace for the ride. It's not gonna stop. And you know, like that's why, like, what I love here is like just the average age of the people in this building is like quite young, right? Like you have to bet on the next generation of people who grew up with this technology, who can adapt and merge with it, right? Like at the end of the day, we actually have to continue merging with the AI. Otherwise, it will destroy us all. But I don't think it will, because we are part of it, right? The phone is already an extension of your mind and of your body, right? And wait till you have the Neuralink wires in your head. Like, we're going to merge with it, and we'll have to be nimble, and we'll just have to, you know, have fun and move fast. That's what I think.
By the way, here in the audience, we have many people who may be thinking of starting their own startup, or maybe someone is already building their startup. If you may give just a few pieces of advice of how to navigate this curve.
Yeah, you want me to like give you the rule book you can follow in order to succeed and like disrupt a big business, start your own company? Is that what you're looking for? Yeah, I have people ask me that question. It's interesting. So you know, like I said, I'm very optimistic, and I'm very tempted to encourage people who come to me asking me, like, should I quit my job, should I start a company? And I really want to say, sure, go for it, what have you got to lose, you know? So you'll lose your money, like whatever, like your time, you're young, you know, just make sure you love doing it and make sure you really care about the outcome. But what I've learned as a responsible person is to lie, and so now I usually lie, and I say that, like, you want to start a company? No, you don't have what it takes. Like, honestly, just like keep your freaking job. You're going to have trouble finding another one, you know. You need to be safe. You got to take care of your folks back home and whatever. Aren't you going to have kids one of these days? Like, don't quit your job. Like, it's not going to work. Because, like, honestly, like, that is actually the right thing to say, because, you know, no one who can succeed will ever take, like, they won't care. They'll just piss them off. They'll be a little pissed at me, but like later they'll thank me, right? Because they're gonna do it anyway. You know, they would never. Someone who's not going to start their thing because like some speaker on the stage told them not to start it, like those people shouldn't start it, right? And the people who should, they will. Like there's no rules. There's no rule book. Like there's like. Most people aren't entrepreneurs, like that's fine. Like there's lots of ways, you know, that people can contribute to society, but the ones who are gonna do it, and the nature of disruption is not following anyone's rules, right? It's like doing something that like the people who really know what they're talking about don't believe is possible. And yeah, the people who do it will do it.
Great. So we have some time for a few brief questions. Maybe we can take a few brief questions from the audience, if any.
I think we scared people into not asking.
Did you ever have an elevator pitch in an actual elevator?
Yeah, I've totally done it. Yes, I've actually, at least one time, no, twice I remember, essentially writing an angel check, like $50,000 check, after an actual elevator ride with some founders. Yeah, like if in certain buildings, in certain elevators, it happens more often than in others. But yeah, absolutely.
Did it end up being a good investment?
No. But the sample size is small. I think it only happened twice. And, well, both companies are still alive. And it's only been like 12 years. So time will tell. Yeah, time will tell. They're still in business, but they didn't take off like that.
Yeah, I have a small question. Like, when do you know when to take risk and when it's better to withhold from that? One may talk about return on investment, like what happens if you do take it and what happens if you're not. But sometimes your options, they are pretty similar. And the risky one, it may have higher outcomes, but eventually it takes a lot of effort and courage to do that. So how to figure out whether to do that or not?
You're talking about from the point of view of the founder, like not the investor, but the founder. Like when do you risk building a business and doing a company? Yeah, well, I mean, that's the same question. Like if you're not sure, you probably should.
Like if I have an option to drop out of school and pursue my own startup or a company, or if I have an option to stay at school, finish my degree, like set up a pretty normal, stable life, and then go with startups and stuff, what do I do?
Well, I just answered that question, before you asked it, right? Like, you should be a good girl, listen to your parents, get good grades, stay in school, and, the great people will start the companies, and you can applaud from the side. Maybe you can work for them one day. That'd be awesome. Yeah.
There's also this idea that you should start a company only if you cannot not start it.
Yeah, you shouldn't need my permission to start a company, or to drop out of school, right? Like, what do you want to do? It's your life. You only get one. There's like no dress rehearsal, You are moving forward from birth to death, right, once. And nobody can tell you what that right path is for you except yourself. So listen to your intuition, right? Believe in yourself.
Unfortunately, we don't have any more time for questions. So, as I already told you, just grab the speaker behind the stage.
No, just very quick question.
Yeah.
This guy has courage.
Thank you very much. A very short question. If we think we don't need AI in our startup, but mentors say that we need to find the place for it, if you think we really need AI nowadays for be a successful startup, or we can work with it, without it?
It doesn't matter what you need. I mean, you should focus on what your customers need and why they really need it. Like, do what your customers really need, maybe even not what they ask for, but what they actually need. And if it's AI, build AI. And if it's not, take care of your customers and things are going to work out. Yeah.
Thank you so much.
Oops.
Thank you.